Here's a stat that should make every founder and HR leader a little nervous. Misclassifying just one international contractor can cost a company anywhere from $10,000 to over $100,000 in back taxes, penalties, and legal fees. And in some countries, it can trigger criminal liability for the executives who signed off on it. And yet, more companies are hiring across borders than ever before. Remote work didn't just survive the last few years. It became the default way ambitious companies build their teams. So today, we're going to solve a very specific problem. How do you hire the best person for the job, no matter where they live, without accidentally breaking the law in a country you've never even visited? That's what we're covering in the next few minutes. Hi everyone, welcome in. I'm Kundan Sharma, and I work with Web Serene, where I spend a lot of my time helping growing companies figure out how to build global teams the right way. Before we get started, a quick housekeeping note. This session is being recorded, so if you have to drop off early, don't worry. You'll get the full replay in your inbox afterward, along with the resources we mentioned today. If you have questions as we go, drop them in the chat. I'll be pulling questions live and we'll leave time at the end for anything we didn't cover. Here's what we're covering today. First, we'll talk about why global hiring compliance actually matters right now, in 2026, not just in theory, but with real financial and legal stakes. Second, we'll walk through the most common compliance mistakes companies make when they hire internationally, the ones that quietly create risk without anyone noticing until it's too late. Third, we'll break down the single biggest decision every company faces when going global. Do you set up your own legal entity, or do you use an employer of record? I'll give you a simple framework to make that call. And fourth, I'm going to show you the platform my own team and I actually use to manage this, Deel, including a quick look at how it works in practice. We'll close with time for your questions. Let's get into it. Let's set the stage. Global hiring isn't a nice to have anymore. It's become a competitive necessity. Companies that limit themselves to hiring in their home country are, by definition, competing for talent in a smaller pool. Meanwhile, companies that can hire in Portugal, in the Philippines, in Argentina, in Poland, they get access to skilled people at a fraction of the search time and often more competitive compensation expectations without sacrificing quality. But here's what's changed heading into 2026. Governments have caught up. For years, international hiring existed in a bit of a gray zone. Companies would bring on a contractor in another country, pay them through a wire transfer or PayPal, and call it a day. Enforcement was inconsistent, and a lot of companies got away with it simply because tax authorities weren't looking closely. That's not the environment anymore. Three things are driving this shift. Number one, worker classification enforcement has tightened significantly across the EU, UK, Canada, and much of Latin America. Countries are actively auditing companies that have a pattern of long-term contractors who function like employees. Number two, permanent establishment risk is a much bigger deal than most companies realize. If you have someone working full-time, exclusively for you, in a country, even as a contractor, some tax authorities will argue your company has created a taxable presence in that country. That can trigger corporate tax obligations you never planned for. Number three, data privacy and labor law requirements have gotten more specific and more enforced. Things like mandatory benefits, notice periods, severance requirements, and data handling rules vary enormously from country to country, and ignorance is not a defense. So the risk isn't hypothetical, it's operational. And it's exactly why the figure it out as we go approach to global hiring doesn't scale past your first one or two international hires. The good news, and this is really the point of today's session, is that this problem is now genuinely solvable. You don't need an in-house legal team in 12 countries to hire compliantly. You just need to understand your options and make an informed choice. Let's talk about how. Let's get practical. I want to walk through the mistakes I see most often, because if you recognize your own company in any of these, that's useful information, not a reason to panic. Mistake one, treating international contractors like employees. This is the big one. If you're telling someone what hours to work, providing their equipment, requiring exclusivity, or managing them the same way you manage your in-house team, in most jurisdictions, that person legally looks like an employee regardless of what the contract says. The contract label doesn't override the actual working relationship. Mistake two, ignoring statutory benefits. In the U.S., at-will employment with minimal mandatory benefits is fairly unique. In most of the world, it isn't like that. Many countries require things like a 13th month salary payment, mandatory paid leave well beyond U.S. norms, specific termination notice periods, and severance pay calculated by tenure. If you're budgeting a hire in Brazil or France the same way you'd budget a U.S. hire, you're going to be surprised and potentially non-compliant. Mistake three, DIY payroll across multiple countries. Some companies try to handle this by having a local accountant in each country process payroll separately. It technically works, but it's slow, it's expensive to coordinate, and it creates a fragmented view of your total workforce costs. It also means every new country is a new project instead of a repeatable process. Mistake four, underestimating permanent establishment risk. I mentioned this earlier, but it's worth repeating because it's so often missed. If your company doesn't have a legal entity in a country, but you have someone functioning as your local representative, closing deals, managing operations, working exclusively and indefinitely, tax authorities in that country may determine your company owes corporate taxes there. This is a genuinely underappreciated risk. Mistake five, assuming your employment contract template works everywhere. A standard US or UK offer letter is not a compliant employment contract in Germany, Japan, or Kenya. Local labor law often dictates mandatory contract language, and getting this wrong can invalidate protections you thought you had for both the company and the employee. None of these mistakes happen because companies are careless. They happen because global employment law is genuinely complex, and it changes country by country, sometimes year by year. Which brings us to the central decision every company has to make. This is the question I get asked most often. So let's break it down properly. You essentially have two paths to hiring compliantly in another country. Path one, set up your own legal entity. This means registering a subsidiary or branch in that country, which allows you to hire employees directly under your own company name. You handle local payroll, tax filings, and compliance yourself, usually with local legal and accounting support. Path 2. Use an employer of record, an EOR. An EOR is a company that already has legal entities established in that country. They legally employ the worker on your behalf, handle all local payroll, tax, and compliance obligations, while that person works exclusively for you, day to day, under your direction. You get all the practical benefits of a direct hire without owning the legal entity yourself. So which one makes sense? Here's the framework I use. Slide. Decision framework. Choose entity setup when you have or plan to have a large team in that country. Generally more than 15 to 20 people is where the math starts to favor an entity. You need a long-term, multi-year presence in that market. You require specific local banking, licensing, or regulatory registrations that only a local entity can hold. And you have the internal resources, legal, financial, and operational, to manage ongoing local compliance. Choose an EOR when you're testing a new market and want to hire your first 1 to 10 people without a 6 to 12-month entity setup process. You want to move fast. An EOR can typically get someone employed compliantly within days versus months for entity registration. You want to avoid the ongoing overhead of local corporate filings, annual reports, and compliance audits. Or you're simply not yet certain that country will be a long-term part of your hiring strategy, and you want to preserve optionality. Here's a simple way to think about the trade-off. Entity setup gives you maximum control and at scale, lower per employee costs. But it comes with real upfront investment, ongoing administrative burden, and slower time to hire. An EOR gives you speed, flexibility, and built-in compliance, with a per-employee service fee that, for most companies under a certain headcount threshold in a given country, is significantly cheaper than the cost of standing up and maintaining an entity. For most companies making their first few international hires in a new country, the math clearly favors starting with an EOR and revisiting entity setup once headcount in that specific country justifies the investment. That's not a universal rule, but it's the right starting assumption for most conversations I have. So let's make this concrete. This is the part where I want to show you, not just tell you how this works, because I use Deel for exactly this reason, and I want to walk you through why. Deel is a global hiring and payroll platform that covers both sides of what we just talked about. You can hire someone as a compliant contractor, hire them through Deel's employer of record service in over 150 countries, or run payroll for your own existing entities, all from one platform. Here's what that actually looks like day to day. When you want to hire someone in, say, Colombia, you don't need to become an expert in Colombian labor law. You select the country and role inside Deel, and the platform automatically generates a compliant, locally compliant employment contract built around that country's specific requirements for benefits, notice periods, and termination terms. Deel's EOR entity in Colombia becomes the legal employer of record. Your new hire gets paid on time in their local currency with statutory benefits automatically included. Think health insurance, pension contributions, whatever that country legally requires. And your company gets one consolidated invoice regardless of how many countries you're hiring in. What I appreciate most, honestly, is the visibility. Instead of juggling 6 different local payroll providers and hoping everyone's compliant, I can see my entire global team, contractors and EOR employees in a single dashboard. Contract status, payment schedules, compliance documents, all in one place. Let's bring this together with a quick recap. Global hiring compliance in 2026 is not optional. Enforcement has caught up with the reality of remote international teams, and the financial and legal risks of getting it wrong are real. The most common mistakes: misclassification, ignoring statutory benefits, DIY multi-country payroll, permanent establishment risk, and copy-pasted contracts, are all avoidable once you know to look for them. The entity versus EOR decision comes down to headcount, timeline, and how certain you are about your long-term commitment to a given market. For most companies making their first hires in a new country, an EOR is the faster, lower-risk starting point. And platforms like Deel exist specifically to make this manageable, turning what used to require a small army of local lawyers and accountants into something you can do from a single dashboard. That's the core of what I wanted to cover today, but I know a lot of you have specific situations in mind, so let's open it up. Go ahead and drop your questions in the chat now. I'll take as many as we have time for. And if we don't get to yours live, I'll make sure to follow up individually after the session. Thanks so much for spending this time with me today. A few quick things before we wrap up. First, the full replay of this session will be sent to everyone who registered, whether or not you could make it live. So feel free to share it with a colleague who's dealing with this exact problem. Second, if you want to go deeper on any of this, whether that's understanding EOR pricing for your specific countries or just getting a walkthrough of the platform, the link is in the chat and in your follow-up email. And finally, if you take one thing away from today, let it be this: global hiring compliance feels overwhelming because it's genuinely complex, not because you're missing something obvious. The companies that get this right aren't the ones with the biggest legal budgets. They're the ones who use the right tools so they don't have to solve this from scratch, country by country. Thanks again for being here. I'll see you in the next one.